Okay, welcome everybody to Wall Street Reporter's Next Superstock live stream, July 15th. We are back with one of our top performing stocks of the past, 12 months. Peak Fintech, Johnson Joseph, the CEO. Johnson, welcome back.
Thanks, Jack. It's good to be back. Did you miss me?
I miss you, the investors.
It's been a while, huh?
It's been about 5 months, I think, right? Because you have to go quiet once you started the financing.
Yes. The prospectus financing. Yes.
And I think it's important for investors to understand the reason why they haven't seen you in since, I don't know, February, I think it was, is because you can't really promote the stock, with this Canadian rules. So you had to be quiet. There was no news. Right. And I think also that's probably one of the reasons why the stock kind of dropped off, because you had to be quiet. You had short sellers, but again, you start off at 35 cents last September. The recent high was $3. We've had a bit of a pullback. So actually, the stock has held up very well, considering, with the market, there's been a massive correction in microcaps, and your hands were basically tied for 6 months.
And we've been quiet for 3 months, for a whole quarter. That's right. Yeah.
But now, okay, so we're going to get into a couple of things. One is you just closed an amazing financing, $52 million Canadian. I guess the main question is, how are you going to deploy? It's a lot of cash for microcap stock.
It is. I don't know. Did something happen, Jack? I don't see you on the screen anymore, but can you hear me? I'm assuming that you can hear. Jack, are you there? Hello?
Yes, Johnson, okay. Can you hear me?
Okay, yeah. I'm sorry. Okay. I don't know what happened there.
There was some internet thing. We dropped out. Okay, we're back in. It's probably short sellers.
Okay.
Okay. So anyway, so you raised a ton of cash, $52 million Canadian. I guess the question is, how are you going to deploy that cash, and which is going to further maximize shareholder value? And again, because our audience, they would know is, okay, the stock, what is $2 now? What's the path for it to get to $20, $30? What needs to happen? So let's open up with that question first.
Okay. First of all, yes, that was a very, very obviously important financing for us. Now, before I get into it, I want to take the opportunity to thank the folks at Research Capital, who did an amazing job. Some of our brokers who've supported us in the past. Also, shout out to Diana, Tamer, to Jason, Dawn, Sheldon, everybody else. I know I'm missing a few people, but
it's like the Academy Awards here.
Listen, we could not have done it without some of these people that have been supporters of the company. So really, really appreciate it. Now, that being said, the $50 million will definitely go to good use. Now, what it allows us to do is it allows us to make certain commitments that we weren't sure if we were going to be able to make with our partners, with business development, all kinds of opportunities that we had that we have in China, right? So we had a range of between 20 to 50 million dollars that we said we were going to raise, and obviously, had we raised $20 million, it would have been different. We would have had to make certain adjustments. But now that we have raised the full $50 million, it allows us to make the commitments, and it gives us pretty much all of the capital that we need in order to achieve all of our short-term objectives. Now, one thing I should mention about that is it allows us also to finalize our forecast, right? So I know that the market has been waiting for weeks, for months, to see our forecast. What are we expecting for the end of the year, for potentially next year in terms of revenue, profits? Well, they won't have to wait much longer, because we've crunched the numbers. We like what we're seeing, and we're going to be publishing our forecast next Tuesday. So stay tuned for that. In terms of commitment, business development, what it allows us to do also, we put out a press release. I think it was last week or a couple of weeks ago. I can't remember exactly. Things are moving so fast with the transactions that we did on our ecosystem, the flow of funds, settling payments, transferring funds through the relationship that we have with Wrong Bank Technology, which is a subsidiary of China UnionPay. Now, I can't stress how important that ability is for us. Now, we said in that news release that we had, I think we'd facilitated 1,200 transactions, a little bit more than 1,200 transactions for the month of June alone. That was really the first month in which the services were implemented. It's not just the services themselves, but it's the number of businesses, the quality of businesses that we've been able to attract ever since we implemented that feature. It brings a lot of credibility to the platform. There are bigger players now looking at us. All small businesses are continuing to open those virtual accounts. So expect to hear more news about that in the next weeks or so.
Okay. You know what I think we should do, because we're going to have a lot of new people, and again, people haven't seen you in like almost 6 months. I think what we should do is just give a quick snapshot of what does Peak Fintech do in the basically in the fintech space in China. And I think just one thing I just want to add is that with $52 million, I mean, basically this is like a NASDAQ scale business. This is not like a CSC. This is like you're prime ready for NASDAQ.
Yes, that's a good point. That we'll address that in a minute here, or pending migration, call it that, to the NASDAQ. We fit all of the criteria to be listed on NASDAQ. It's just a matter of administrative procedure right now, and I'll get into that in a minute. But just to address your first, your first request about an overview of what
the snapshot,
Peak Fintech Group does is what we do is we automate the commercial lending process in China. So what that means is that we've built a business ecosystem where we invite small, medium-sized micro businesses to come be a part of this ecosystem. They give us access to their data, and we invite lending financial institutions to be part of the ecosystem as well. They enter the lending criteria, and essentially we use analytics, artificial intelligence to match the lenders with the borrowers, and we facilitate lending transactions between the two parties. So in a nutshell, that's what we do. And again, for those who are not too familiar with the company, we started out in 2018, generated $1.6 million in revenue, scaled that up. The following year, we had $11.7 million in revenue. 2020, we had $42 million in revenue. And like I said earlier, we're forecasting.
What happened here? Okay, it looks like we lost Johnson. Okay, stand by. Johnson?
Yeah, sorry.
We lost you. Okay, this is okay.
Am I back?
You're back. Okay, so basically, you were saying, okay, so you were talking about how fast the company has been scaling, and I think so. You did 40 million plus last year, 2020.
2020.
The most recent quarter, you did 15 million plus Canadian.
We did 15 million, yes,
okay.
in the first quarter of this year. So second quarter numbers are due out end of August, if I'm not mistaken. So we're planning on continuing on that growth path for the foreseeable future. Again, I don't want to steal
okay.
What's the term here?
The surprise, whatever. Give us the first term.
We'll see next Tuesday when we file our guidance.
So you could be. I mean, is it safe to say that you could do 100 million run rate in this year, 21? Because you're basically at 60 million now.
The run rate.
Yeah.
Yeah, listen, I'm not gonna comment on that, Jack, if you don't mind. So it's only a few days away. It's less than a week away. So next Tuesday, the numbers will be out.
Okay, let me throw out a comment. So basically, if you're doing 100 million run rate, right? And you got 50 million cash. I mean, basically, this is a NASDAQ style company. You should have a NASDAQ style valuation, 10x, 20x revenues. That's a $1 billion valuation.
The only thing I can say about that, Jack, is that we're not on NASDAQ yet. So that's one of the reasons why we want to graduate to that larger exchange, make sure that more and more people are aware of the company. We will also have an outreach program to make sure that more investors. Yes, we're here on Wall Street Reporter. Great program, by the way. We get a lot of comments and positive feedback every time I appear on the show, so I appreciate that. But we're going to be reaching out to a broader audiences in the U.S.
Beyond the Wall Street Reporter, who could there be on the Wall Street Reporter?
You're right. Like, I mean, yes.
Goldman Sachs. I mean, I don't know, whatever other institutions. So Johnson. So basically, if you do basically the stock would be a 3x just if you get a very minimal 10x Multiple.
Again, I'm not going to comment on that. Like,
Okay.
I'm
just saying. It's not you saying
what it does.
I'm just throwing an opinion, which is like, everybody knows that's what these stocks trade at 10x. So the stock should be, there's an easy path to $10 is what I'm saying. Of course, this is not, investment advice, all that other disclaimer. But okay, so you got some very, I think we should talk about. Give us some real examples of how your clients are using it. You had that, was it the 618 festival? You got different partners. How are your customers using it? In other words, how are they using kind of this lending facility that you're connecting them with banks stuff? Give us some examples, some real examples.
You know what? Like, I mean, yeah. So we call it a lending hub, but more and more, Jack, what we're seeing is because we allow businesses to I guess do business with themselves as part of this ecosystem. So it's more of it's becoming more of a business hub than just a lending hub. We're facilitating more than just lending, right? We get fees when transactions are done, when lending transactions occur between the small businesses and the lending institutions. But going back on what you were saying about 618, we learned a lot from 618. That was our first participation in the event. There was a lot of preparation that went into it. But just to give you an example, we have distributors. JD.com is they actually started 618, right? So they invented the whole thing. Now we have all of these other platforms that are participating in the event, but we have clients who sell to JD.com, right? So as JD.com sales ramp up, right? So JD.com needs to, they reach out to these suppliers for more product, blah, blah, and stuff like that. And these suppliers, they have to turn around and get that from factories and stuff. And there's how can I put this? There's a cash flow issue, right? So this is where we come in, so the demand from 618 is growing up. People are going up. So consumers are buying products, and there's a demand from JD.com on these suppliers, and these suppliers basically have to source material. They have to source products from the factories, and oftentimes they need cash. They have a cash flow problem, right? So we came in, we helped them plan for that. So there are planning sessions in terms of what was expected, in terms of demand for the products on JD.com, and we helped them basically quickly facilitate the funding that they needed in order for them to take full advantage of the event. So again, this was our first year, very, very successful. We plan on being more active in the future. So not just on 618, but there's a bigger event called Singles Day happening in November. So we're going to be working with our partners on that.
They got a lot of these holidays, which are very commercially oriented in China, where people come up with these. It's amazing. So so basically, bottom line is what you're doing is you're helping these online sellers get the financing they need so that they can buy inventory and sell.
Not just, but the thing, it's not just online sellers, right? It's businesses, whether they're online, whether they're in the real world. Yeah, exactly. It doesn't matter what industry either, right? Like, I mean, it could be retail. It could be retail. It could be restaurants. It could be, I don't know, like people trading in petroleum products. It doesn't matter to us. If you are a business and you have cash flow issues or whatever, and that's a common problem in China. Okay, because some companies will pay 90 days, 120 days, and if you're in a relationship where you're dealing with a larger company, that larger company gives you terms that affects your cash flow, then you have a cash flow problem, right? So this is where we come in. We solve.
I didn't know that. Is it in China? Is it typically that companies pay late, to pay their vendors?
Oh yes. Like, I mean, yeah, big companies, when you're doing business with them, they hold the bigger end of the stick, the stick, right? So they can decide to pay you in 120 days. Sometimes it takes can take like 3-4 months. Sometimes,
and that's where you come in. So basically, they need you to give them. So it's an essential part of the economic fabric.
Absolutely. And in all fairness, this is not just a problem in China, Jack. This is, and that's why
everybody has the same issue,
right? So that's why we have plans on coming to North America and replicating the concept here. In fact, it's already it's already being done to a certain extent by Kubler here in Canada, and there's an expected transaction that should take place between Peak and Kubler, whereby Peak will acquire Kubler, and then that will allow us, Peak, to come to North America, to Canada first, and then eventually in the US. So we have plans to be in North America with a similar service by the end of this year.
Oh, okay. That's an interesting catalyst. So in North America by the end of 21.
Absolutely, yes.
And when you say North America, are you including the US in there? By
yes,
the end of
yes.
21? Okay.
So first we would launch in Canada, and shortly thereafter, maybe a couple of months after, we would be in the US. So that's the plan, yeah. And by the way, you see, we're helping through events like 618, and just as a regular, I guess, service that we provide to businesses. We allow them to, again, get funding and also to do business with each other, right? As I mentioned before, it's becoming more of a business hub than just a lending hub. Now, JD.com, I mean, JD sells, retailers from all over the world sell on JD.com. Well, not so much all over the world, but more and more now, JD has a program where they allow foreign retailers to open storefronts and sell on JD.com. Now, with the financing services that we offer, the network of influencers that we have in China that are already working with us, we also believe that this would be a great opportunity for us to allow North American businesses, retailers here in Canada and in the US to be part of the, I guess, the business hub, let's call it that, to join the business hub here in North America and be able to sell their products to a Chinese audience. So this is something that we'll be working on over the next few months as well.
Okay, I want to talk about this. You started doing something which is pretty interesting. We talked about back, I think, in January, which is the program you have where you're financing essentially the inventory for these influencers on social media. In China, basically they sell, which is, it's becoming such a huge business. In the US, we don't have it yet, or outside of China, but where essentially they're selling, goods on, it's sort of like a QVC in the US. It's a massive. Can you talk about how that's going? Because that's a very interesting business there.
Yes, that's another side of our operations. As I mentioned before, we're not limited to any type of business, any industry, right? So these influencers are becoming a force. Not becoming, they already are a force in the retail world in China. So a lot of products get sold through these showcase events that they put together. They have these events on apps like WeChat, Weibo, TikTok now. So they have these shows where they showcase products. Like you said, it's QVC, like, a home shopping network or whatever. So they're very clever in the way they do it. They have these skits sometimes that they put together and stuff. So they showcase the products, and they have a ton of influencers. They have millions of influencers. So when they showcase a product, then typically their influencers will start to order the product, and they're becoming a force. So what we're doing is these influencers, like I said, they put elaborate shows, right? So these shows, there's a cost to putting these shows together.
They got to have inventory. They need like $100,000 of inventory, whatever they need, right?
They will either need inventory or they need funding in order to put these shows together. Okay, like I said, these shows, these are professionals, Jack. This is not like, this is not just like, one person. Hey, you know what? Like I have this new phone or whatever I want. No, like, I mean, they have cameras, lighting, everything and stuff like that. Like I said, they sometimes have like, it's like putting together a little play or a little mini movie,
like where a Bollywood production,
where they showcase the products. It's very, very interesting.
Right.
And it takes money to do that, So they use humor, they use all these different things and stuff like that. So it's almost like the followers don't feel like they're being sold a product. You know what I mean? So they're just seeing the product in the context of the event that they're watching, and it's a very, very effective way for them to push product. And they will need funding to put the shows together or whatever. So we help in that aspect as well.
Yeah. Yeah, somebody was just saying this. We have, they have, classes. There's a whole, it's a whole industry. It's really taken
It
off.
is.
Like a
Yes, it's
crazy
amazing.
thing.
Yeah.
But this, again, that's a tiny part. That's just really a tiny part of what you're doing. I mean, like, let's talk about some of the big partnerships that you have. You mentioned JD. I think you have like several of these huge partnerships with what's the other company there that does the food products? I think there was a couple of other big
Yeah,
partnerships.
we have a lot of distributors who have access to who have exclusive access to either brands or they have exclusive access to certain stores like PetroChina, convenience stores across the country. So yes, we have some very significant partnerships. ShopEX, we mentioned these online stores, right? So a lot of them use ShopEX as their management, like accounting or store management application. So partnerships with ShopEX, we already mentioned the partnership with Rongbang, who is a subsidiary of China UnionPay. So what the audience can expect to hear going forward, Jack, is again, we didn't have the funding, or we weren't sure about the funding to make certain commitments. But now that we have the funding, so you're going to be hearing a lot about what we're doing with these partners, ShopEX, Rongbang, or UnionPay, BJM, the distributors. So there's going to be a lot of news coming up in the next few weeks. I think the market and the audience is going to be sick of hearing from us.
Okay. Oh, so there's going to be a lot of news. So the news flow is finally going to start again.
We were quiet for 3 months, but I would say over the next probably like through the end of September. This is how far we can see so far, but like through the end of September, there's going to be news coming out every week, sometimes twice a week. There are a lot of things that are happening right now that we're very excited about that we're going to be sharing with the audience and the market. Yeah.
Okay, so the bottom line is going to be a lot of catalysts for the stock to move. Not that this is about the stock, but but there's going to be a lot of catalysts. One thing which I think is very interesting too, somebody was asking about the default rates and things like that on the lending, but I think one of the key things which is going to tie into that is what differentiates Peak Fintech from like other people. There's other companies doing similar things, right, at various levels, right? So, obviously you're generating some significant numbers, which validates that the model is working, right? You're doing 60 million run rate, 100, could be 100 million, I don't know yet, but so what differentiates Peak Fintech, and so how big is your moat, and maybe that possibly ties into these low default rates that you're doing? Like what makes you unique?
Okay, that's a very good question, and that ties into some questions that we've seen people ask about what's happening in China right now with technology companies and individuals, privacy, blah blah, and all that stuff. So what makes us different is really the fact that when you look at lending in general, the focus has always been on the consumer side. Okay, so a lot of platforms focus on consumers, right? So they're the consumer lending, and that's one of the reasons why the government has been cracking down. A lot of consumers were getting easy access to credit that they perhaps normally would not have qualified for, right? So what happened was that they ended up in debt, and there's been some tragic stories about people doing tragic things when they couldn't pay back the money that they had borrowed or whatever. So the government started to crack down on that. All of these institutions were lending to consumers and creating this huge problem. So the government stepped in and said, okay, you know what, we need to pull back here and take a look at what's happening in this industry. So the number one thing that sets us apart is that we are not a consumer-based platform at all. Our entire focus is B2B. We help businesses get funding, and we help businesses do business with each other. That's what our ecosystem is about. It's really a business-to-business ecosystem, right? So that's the number one thing. So we talk. There's been stories about, for example, DD, right? The ride-sharing service. Recently, I think they went public in the U.S. on the New York Stock Exchange, if I'm not mistaken. And shortly thereafter, The government had their app pulled from app stores in China. And people are trying to draw a parallel between us and companies like that. They're also a technology company, but the reason why the government did that was, for our understanding, is for personal privacy issues. Now, some of these applications, again, this is a consumer app, a consumer service. So what they're doing is they are collecting data, personal data, sometimes personal private data, sometimes, well, according to a couple of things that I've read, perhaps the users, when they downloaded the app, were not fully aware of all of the information that was being accumulated. So again, the government stepped in to protect the privacy of consumers, right? So again, we're not in that space at all. So there should be no parallels drawn between us and tech companies who deal with the consumer market. That's not our market. Okay.
The other thing, and also, I think the other thing is, the whole thing in China. It's there's a very sensitive political situation there, and like we've had companies that like Alibaba ran into problems. So you're basically walking a very clear line. You're just sticking
correct.
to the business. You're not getting involved in politics.
And the other thing, Jack, I want to mention is, like, I mean, all of these things, all of these regulations are actually working in our favor. Like, I mean, listen, in all transparency, the government has looked into our operations in China. They're obviously aware of what we're doing. So we've done deals. Well, that's the term. Partnerships. We've worked with municipal governments, provincial governments, even the federal government is aware of what we're doing. So to have a partnership, for example, with Rongbang Technology, which is a subsidiary of China UnionPay, which is a state-owned, government-owned entity. So they would not have allowed this to happen had they not already looked into our operations to see what we're doing and understand clearly what it is that we're doing. So again, I think all of these regulations are actually working in our favor because we are helping businesses and we're not dealing at all in consumer data. So to answer your question, Jack, that's what really makes us stand out, is the fact that we're focused entirely on B2B, and we are a lending aggregator. We're not a lender. Like, we have one subsidiary that makes loans itself, but that's just a small fraction of our revenue. Most of our revenue comes from the lending activity that comes from other lenders who are using our platform, using our application to make loans.
So I mean, basically, you connect the businesses, the borrowers, with the banks. You're not involved in financing the transactions yourself.
Correct.
I think when you originally were starting the model, you were doing that in a small scale just to prove it. But you're not.
Correct.
That's correct. That you're not. That's not.
And that will get us into the lending default rates, right? Like, I mean, one of the reasons why lenders are buying into to our ecosystem concept is because we have proven that using our system, using our technology, that they can expect to significantly decrease their default rates. So COVID-19, it wasn't so much defaults, but if you look at our financial statements pre-COVID-19, the default rate was negligible, pretty much non-existent. Okay, for our own lending institution, which again, it's a small portion of our revenue, and for the lenders who use our system as well. Now, after COVID-19, obviously, that caught a lot of businesses off guard, right? So their ability to generate cash flow was impacted. So naturally, the businesses need a little bit more time in order to be able to pay back the loans that they had already contracted, right? So the default rates went up, and our credit, I guess the allocation for bad debt in our financial statement went up as a consequence of that. But in terms of actual default, there has been the actual loan default rate still remains the same. Now, again, loans are being paid back later. They're taking more time, basically, instead of 30 days, 90 days, 120 days. Well, instead of 30 days, the repayment has increased because they don't, it's taking them more time because of COVID-19 to generate the cash. But the borrowers are still repaying back the loans. So those are the reasons why lenders are using our ecosystem concept to make more and more loans to
Okay.
business.
And just to figure out, the business model is, how do you make money? You make money as a percentage of the loan, or you get, or the transaction? How does
Technically it's a service fee, because again, we regulations, right? Like, I mean, we're not a lender. We don't want to be regulated as a lender. So we're not charging interest, right? So the lenders are charging their interest, they're earning the interest. We charge a fee. We charge a service fee, essentially. So that's what you can call it. But the service fee, it can be pegged to the I guess the value of the loans that are facilitated. Yeah, you can put it that way, but it's a service fee.
Okay. So basically, you make more money, on a $100,000 deal than a $10,000.
Than a $10,000, yes.
Proportion.
Correct. Yes.
10 times as much. Okay. So, question here. Okay, let's open up for some questions. I think so hopefully we can answer some audience questions. Can you give us an update on the adoption rate from all the deals signed in the last 6 months? Is the rate growing? I think he's asking, are people borrowing more once they sign up?
I think that question is related more to the deals that we signed with the large distributors, the potential to add. I think by the end of December, we had signed deals to add a potential 350,000 plus small business to our ecosystem, and then plus there's the deal with ShopEX, who's got like millions of users. So yeah, the adoption rate is going well. What I will say about that is we expect to reach a milestone in terms of number of businesses that are part of this ecosystem. So that will be one of the news releases that the audience can expect to see from us. So that will give a clear indication as to what the adoption rate has been over the last 3 to 4 months or so. Okay.
Let's see here. Question. Recent news states $300 million transactions came in, peak receipts of 1.5%. That's, I guess, your commission. Could you please comment on how much revenue peak received for this is? Okay.
I think this is related to the fund transfer services that we implemented, payment settlement. You know what? Like the answer to that, I don't want to get too specific for this reason. A lot of our partners and clients, believe it or not, some larger clients have started to read our news releases, and they're following the company, like out of China. They're in China, but they're following. So we have been advised to not to disclose the fees that we're earning on certain services that we provide. So all I can say to that is, listen, if you want to know about the company's revenue or ability, how fast we're growing, that will be answered in the forecast that we're going to be putting out next week. So that will give you an indication in terms of our ability to earn revenue going forward.
Okay. A couple of people are asking a variation on the question of how certain are you that Cubular deal is going to be closed, and when is it going to be closed? So that's the variations of that question.
Okay. Yeah. So obviously, I mean, if I'm talking about expansion to North America, that implies that there is a transaction between Peak and Cubular. So the two companies are somewhat related, so to speak. So the negotiations are on friendly terms right now. So the anticipation is that there will be a transaction between Peak and Cubular before the end of, I don't know if it's going to be before the end of the summer, but certainly we expect it to be done soon enough that will allow us to deploy Cubular or Peak, whatever you want to call it, in North America by the end of this year.
Okay. People are asking about Pinduoduo. Update on what's happening there.
Okay, listen, Pinduoduo is similar. It's a platform similar to Alibaba, to JD.com. Now, specifically about Pinduoduo, it's, you know what, I can't say too much about Pinduoduo because the government is looking at data companies who accumulate a massive amount of data. I can't talk about Pinduoduo's business right now. So if I talk about our relationship or what we're looking to do with Pinduoduo, then I would be talking about Pinduoduo, and unfortunately, I cannot do that right now for the time being.
Okay. Can you provide more insight on the higher margin products? Is the recent capital raise meant to fund the scaling of those product offerings? So
that's an excellent question. Yes, absolutely. One of the things that I've been talking about is yes, we started off providing supply chain services in the city of Jiangyin in the province of Jiangsu, and that was more of a client acquisition strategy for us. Low profit margins, but we had fully expected that those transactions would lead us to more profitable transactions. And also the fact that Gold River has been taking over a lot of the bundle services that we're offering in addition to supply chain clients. So those two things are combining to lead us to transactions that are more profitable. So again, evidence of that will be shown in the forecast that we're going to be putting out next week. But yes, definitely the company is doing more profitable transactions. In fact, I'll say it again. I've said it before. We expect to have a net profit this year in 2021. Okay,
net profit. So Peak will have a net profit 2020 this year, 21.
Correct. Yes.
Okay. So far you've exceeded expectations with projections and everything. So this is a positive. Question here. What did I miss here? Somebody's asking. Okay, so we talked about global expansion. You're in China. Are you planning to do anything in India?
You know what? Like for the time being, our focus is listen. There's so much opportunity in China. We're just starting to scratch the surface. Like, I mean, it's a huge market. So we plan on focusing on China first, then looking at North America, and after North America, our plans call for Europe. So India is not on our radar screen, so to speak, yet. So in chronological order, let's call it, it would be focus on China, coming to Canada, US, and then eventually Europe. After that, then again, assuming there is a deal, a transaction between Peak and Kubler that basically opens the entire global market to us, we'll look at other markets as well. And yes, certainly India. Listen, where there are businesses need for funding, then we will be there. Just think of
I mean, you have plenty. I mean, just with China alone, it's not like you're going to run out of.
It's not about
right.
running. It's not about running out of opportunities. But again, you think of just the concept of a network, right? Because this is what Peak is. I mean, the lending hub, which I think eventually is going to be called the business hub. This is. We want to build this as an international network. So if you're going to be a network, think Facebook, whatever, Twitter, whatever, there are no borders, right? So we have that same vision. Now, the lending activity itself will be limited or by jurisdiction, right? Because you have different rules in different countries for banking, for financial services and stuff like that. So that part of the ecosystem will have to remain by jurisdiction. But as far as connecting businesses with each other, networking, that kind of stuff, there are no borders. So we are planning on implementing this ecosystem concept in different parts of the world, and eventually connecting all of these businesses, if they can do business with each other, network from country to country.
And you get a percent. So in other words, basically, it's going to be a trading platform for these businesses. So, a guy has, I don't know, a container of, bottled water or whatever it is. You connect them with a buyer, and you get a percentage of the transaction.
And they need funding. We help with the funding. So again, this is. Hey, listen, we're looking at building a business hub, an international business hub. That's where we're going with this thing.
That's actually very interesting, because so you're developing these customer relationships. You're giving them the financing now. There's a lot of similar. So essentially, it makes sense to have that thing where you connect them. It's sort of like think of it almost like an eBay for business, buying and selling whatever it is that they need.
There are all kinds of different ways you can look at this, but essentially, yes. Yeah, listen, if you are a business and you're looking to do business with other businesses, then be part of the ecosystem, essentially.
Okay, I think we're gonna have I think we're gonna have time for just one or two more questions, and then we're gonna have to have you back in about a week or so, 2 weeks, because there's gonna be a ton of questions.
I'd love to come back after the forecast comes out.
After the forecast, okay, let's do that, because it's been so long. It's like, okay, what some people are asking. Okay, so in terms of NASDAQ, is there going to be a share consolidation? Are you going to do a reverse split?
You know what? I know the consolidation. Well, not all people, but for some people, they see the word consolidation and it scares them. But in our case, we believe that the consolidation is going to be a very positive thing. Now, that ties into our NASDAQ uplist, right? I think I've mentioned in the past that we've checked off all the boxes as far as qualifying for the NASDAQ. Yes, it's still under review right now. The last remaining criteria for us is the minimum stock price, right? So the minimum stock price will require us to do a consolidation. Now, we had a shareholders meeting back in February where we approved a consolidation of up to 5-1, but in all likelihood, the consolidation will likely be limited to 2-for-1. And that should be enough, we believe, to help us to qualify for the NASDAQ. Again, it's not finalized yet, but that's what it's shaping up to be. So you can expect to receive news on the consolidation ratio in the coming days. Okay, days or weeks. So with that consolidation news, then once the consolidation takes effect, then it's probably going to be a matter of a couple of weeks before we finalize the NASDAQ application and we're listed on NASDAQ.
But like the stock, the stock was, again, it was recently $3. Let's say the stock goes to $5. Would you do consolidation then or no?
If it goes to $5, listen.
It's not a big. It's not a big deal for the stock to be at $5 right now. It should be based on the fundamentals.
You know what? Unless you know something, I haven't looked at the stock today. I don't know what it's trading at right now. I'm focused on businesses.
Right. Well, it's in the $2. It's been stuck in this $2 range.
Whatever it is, I think the consolidation, Jack, is going to not just for the NASDAQ. Yes, the primary reason why we would do it is basically to qualify for the NASDAQ. But in terms of number of shares in circulation, there are many benefits for us to consolidate the stock. So I think we'll look at doing a 2-for-1 consolidation no matter what. Institutional investors, once we're in the NASDAQ, institutional investors look at the number of shares that you have in circulation. And if we're to do a 2-for-1 consolidation, we would be kind of like in that sweet spot. This is what our advisors are telling us. So there are a number of reasons for why we think a 2-for-1 consolidation would make sense.
Okay. Johnson, I think on that note, let's leave people hungry for the next live stream, probably next week or within the next 10 days. Let's just plan it out. We'll have a ton. We've got a ton of questions. We just ran out of time.
Okay, we'll leave more time for questions next
time. Johnson, thank you again, and we'll catch up with you in about 10 days.
All right, sounds good.
Hopefully, there'll be even more news by then.
There should be. All right, thanks, Jack.
Okay, let's get ready for our next exciting presenter, AIML. We have a whole theme of artificial intelligence today because that's Peak uses AI and you're using AI.
That's right. Yeah.
Tim, I just want to get at sub. Just can we get the camera? I want you more centered in the frame. Let's get you more.
Okay. Let's see. Can I?
Something is. You're kind of at an angle here. Let me just get this set up. More. I guess drop the camera down a little bit.
Down a little bit. Okay.
Okay. Like that. Okay.
Is that better?
Yeah, better. Yeah. Hang on a second. Let me just pull this up. We'll get started in just a second. We've got a lot of people who want to know what's happening with the
beauty of live TV. Eh?
The mental health app here. Here we go. And Okay, let me just make sure everything on the screen is correct. Yeah, Tim. Okay, perfect. Okay, so I'm just gonna do a quick intro. Let me get some water.
Actually, and me as well.
Okay.
All right.
Welcome everybody to Wall Street Reporter's next Super Stock, a live stream July 15th, 2021. We are back with AIML Innovations. AIML is the symbol. Let me correct this symbol here. There we go. That's the right symbol on the screen now. AIML. And we're going to find out the latest news, the latest developments on where this company is going. So, Tim, welcome back.
Thanks for having me, Jack. It's always a pleasure to be here.
Absolutely. So, Tim, this has been some very exciting developments. You're basically going to be acquiring, or you're starting off with, I guess it's a percentage, 20% of this French mental health app. And it looks like really what you're really doing is building out like a full suite of health tech apps. I mean, that's kind of, look, you start off with a health gauge. Now you got this the French company.
Yeah.
Can you explain to us like where are you what's your vision for this company? Like what is really what I want to know is what needs to happen for you to get revenues with the existing suite to get revenues to, let's say, $20 million, $20 million. Because if you get to that number, the company would trade at a 400 million valuation, so it would be a 20 bagger. And at the end of the day, our audience, they just want to know what's going to make the stock price go up. So, what needs to happen to get, 15, 20 million is a low bar. So
yeah, it is. It absolutely is. And in fact, we're constantly working on these sorts of business strategies. And so your question, doesn't come as a difficult one for me. Well, first of all, when we talk about our first acquisition, which was HealthGauge, their projections alone cover that nut, that 15 to 20 million in revenue. They're looking at that in their year or two of revenue alone, with ignoring what else is going on in the company. And the way they're intending to reach those sorts of revenue numbers is through aggressive penetration in the Canadian and U.S. markets via a B2B business model. And their strategic partners are organizations in the healthcare industry, such as the insurers themselves, whether they're private insurers in the U.S. or government insurers in Canada and other countries, ACOs, HMOs, hospitals, or even large corporations. So that is the business model on the HealthGauge side. Of course, they also do have an e-commerce site set up so that there are some retail sales being generated as well, but that's a bonus revenue stream. And so our first projected revenue stream is HealthGauge, and we're making good progress towards those goals. They've been working with a number of potential strategic partners for the last many months, and are getting to the point where they're converting some of that dialogue into first pilot projects, and then the pilot projects over into going concern commercial contracts.
So HealthGauge is getting traction, and now you picked up you're getting the French company. I get the name of it. Tech2Health, right? What's that?
Tech2Health, you got it exactly right.
Tech2Health. Okay, they don't make it easy. Okay, so Tech2Health, we talked about it on the last video. Anybody they could watch it. Essentially, they're like a mental health app, and they have an interesting model. So their customer base is really it's an enterprise model. So they're signing up,
very much
100,000 customers at a time. Give us the model, and because they put out some interesting numbers. Was it 5 million for one customer? I want you to talk about like what they do and how big the opportunity is, like how fast and how far can they scale this thing?
Sure. Okay, love to. So Tech2Health is a Paris, France-based digital healthcare innovator, and they have a portfolio. You are referring to it as an app, and they do have an app, but that's one small piece to the puzzle. It's actually a complete, proprietary basket of services and products that they supply, and it includes some unique proprietary digital assets, remote live counseling, and even physical wellness centers. And so they're using that in combination to provide everything from general wellness through to clinically supported, evidence-based psychotherapy with psychiatrists and everything in between. And so it's a complete solution for corporations who are mindful of the the needs of the mental health needs of their employees, and also insurance companies doing the same for their insured, that provide both medical and non-medical interventions for body and mind healing via their digital platform. So it's a complete spectrum of products that support mental health. And the mental health is the next wave of the pandemic. There are recent studies that show that nearly half, I think it's 48% of employees globally feel that their mental health this year as compared to a year ago have deteriorated. Incidents of everything from drug and alcohol abuse, spousal abuse, suicide, depression, anxiety, and so on have skyrocketed, in part because of the pandemic, but in part it's a reflection of modern life. And while digital health has made some tremendous inroads recently in other areas, in mental health, it's just gaining traction now.
Yeah, the mental health thing is getting a lot of attention. There's a couple of, there's been a couple of apps, mental health apps, that are getting huge valuations, like unicorn type $1 billion valuations.
And absolutely.
So I want to. I think that the thread that ties in together all the different aspects of the businesses that you're basically acquiring is this AI and ML. So artificial intelligence, machine learning. That's kind of the thread that ties everything together. So
right. So
you're basically
the two threads. That's one of them. Sorry for interrupting, Jack. But yeah, that's definitely one. But specifically, what we're focused on today is the AI-based technologies as they apply to digital healthcare. We are looking at some potential acquisitions of AI technologies that extend beyond the digital healthcare, but at this point, our acquisitions have been focused on the healthcare side of things.
Okay, let's talk about the numbers now. So Tech to Health, they put out some news. Explain to us what this means, how they got 5 million over a couple of years with that's just one company, one client, small company. So what's the deal about?
Sure. So important to note that Tech to Health rolled out their new platform 1 month ago. That's it. This new product has only been out in the marketplace for 1 month, and in that month, they've signed 3 significant contracts. One with a global industrial user, industrial manufacturer. The name will be published, but the company themselves wants to make news on it, and they're talking about a September timeframe for them announcing their partnership with us. So until that point in time, we've just got to refer to them as a global industrial company.
Okay.
They operate literally globally. They have 170,000 employees. They operate in 5 different languages. So they're a very large going concern corporation. They've signed a 3-year contract with Tech to Health, and that's to supply their 170,000 employees with their mental health support.
So I think the key first takeaway is that's a very significant validation that a company of that size, 170 something thousand employees, is choosing to use Tech to Health.
Exactly. Absolutely. That's a great validation, a great proof of business model when you have a major global corporation who could subscribe to this sort of health product in a number of different places, and they chose to partner with Tech to Health. So that's definitely a feather in the cap of Tech to Health.
Is there a cross-selling opportunity into HealthGauge from this
Clearly.
deal?
Absolutely there is. In fact, shortly after this agreement was signed between Tech to Health and this industrial company, the industrial company said, okay, great, now that we've put that to bed and you're going to be taking care of our employees' mental health needs, we do have one other really significant issue, and that's that for whatever reason, we seem to have a large percentage of our employees globally that have hypertension issues, high blood pressure issues. Do you know of, or do you have some sort of technology that can help us monitor and early diagnose our employees with high blood pressure? And of course the answer is, yeah, do we ever? We're partnered, one of our sister companies, HealthGauge, that's exactly what they do. Through this device here that I'm wearing right now, this is the HealthGauge wearable device. This will monitor blood pressure 24 hours a day and give early warning back. And so this is actually one of the the sweet spots of HealthGauge's ability. And so yes, now we've got a new dialogue going on with this same industrial company for products from the HealthGauge side. And
it's
so
not just blood pressure. I mean, it monitors like a whole bunch of other health signals.
Absolutely. So besides the blood pressure, it's monitoring your heart rate variability, ECG, PPG, as we mentioned, the blood pressure, your temperature, body temperature, sleep patterns, activity levels, and a whole bunch more, and giving you real-time feedback. And that is their entire business model is working with employers such as this that we're talking about, and supplying that employer with the ability to help their employees, monitor on an ongoing basis their chronic needs for different problems or diseases like this. So there is tremendous crossover between what HealthGauge is doing and what Tech to Health is doing. And in fact, that's part of our business model, is we're not only looking for companies that are in the AI and healthcare space, we're looking for companies that have synergy. They're expected to operate as standalone entities and survive on their own, but at the same time, where there's synergy for them to cooperate and provide cross services, they'll do that as well. So one will piggyback off the other for sure.
Yeah, so that makes so it becomes almost like a virtuous cycle, and so you can really scale from there. So exactly. So let's get back to the original question. So with that said, right, you have this is just one. This is just one
right.
customer. I mean, the world is built of companies.
So the initial contracts, 3 contracts in the first month. First one with this global industrial company with 170,000 employees. The other 2 contracts are with insurance providers out of France. One of them with about 85,000 insured. This product, Tech to Health's mental health support, will be offered and covered by the insurer for their 85,000 employees, insured members. And same with the third company. It's also another online insurance company, and this will be provided as part of their basket of healthcare covered products under the insurance plans. So collectively, in the first month, Tech to Health has accessed 300,000 potential users of their product, and based on the number of individuals, these 300,000 potential users, and some of these.
How much per month do you get from HealthGauge? How much does the device sell for again?
So
what's the
are you talking HealthGauge or Tech to Health now?
Let's do both. Let's do HealthGauge
okay.
first.
Okay, so on the HealthGauge side, for subscription to the platform, the employers will be paying $25 a month, and that will give the employer, the employee or the insured, and their medical team full access to all the medical analytics for that user.
Okay, so all you need is I mean, if you just get to 100,000 people on the platform, right?
Yeah.
Not even 100,000. Even if you get to 50,000, that'll give the market an indication that you can scale to 100. And 50,000 users is nothing. That's what is it? That's 50,000 times 20. Is that $1 million a month? A little over $1 million a month, right?
That's right. Exactly.
That's my math.
Exactly.
So,
so it's significant just there. That's on the health gauge side. On the tech to health side.
So that'll give you 10 million plus $12 million run rate from that with just 50,000 users. And that's the thing. That's what would get you to that 10x plus upside in the stock. So you already have right now a built-in path to get there. You have this 100,000 users for the, not all of them, probably not all of them are going to use this, right? It's going to be maybe 10,000, whatever.
Right. There's going to be, some adoption rate and that's to be seen, but it starts by having access to, a set of users or potential users. So the numbers you quoted are on the health gauge side alone. Now, if we throw in on the tech to health side, what you're talking about is this revenue projection for these first 3 contracts in the first month was based on projected potential uptake by the employees and users based on some historical projections. But what it doesn't take into account, and this is a big thing, so this was based on $60 per user consultation fee for mental health. And that's great. And on the basis of that, there's a $5 million of projected revenue. But starting in January of 2022, so 6 months, less than 6 months out, under new European law, the employers and the insureds must cover the mental health for the employees with respect to the chronic or the serious mental health issues. And on that side, the government mandated price is 800 euros per quarter per user, which works out to be about $3,500 per year per user.
Just for mental health?
Just mental health. Just for mental health. $3,500 per user per year.
Okay,
so the numbers get real large, real fast if you have any sort of adoption rate amongst your user set for that need.
Okay, wait, does that mean that you can get that $3,000 per employee per year? But no, you're going to get a percent. You're going to get whatever it is percentage. But it just shows you that the government is
right. So So the government is mandated, and of course, most insurance in Europe is government funded insurance, but there are a lot of private insurers as well. But it doesn't matter whether it's government funded insurance or private. The law is that they have to reimburse the company per employee that uses this service for digital therapy, to the extent they reimburse to us to the extent of $3,500 per user per year. And so we're starting off with 300,000 potential users. Now, of course, we're not suggesting that those 300,000 all need deep psychotherapy counseling and are going to be subscribing to this, but there will be a percentage. And my point is that of this $5 million initial projection revenue, that doesn't include any of this because it starts in January of 2022. We just set it to the side and did not include that in the projections at all. You throw that on top of this, and even this first month's worth of contract where we've projected 5 million can be many, many times larger than that. But that's just the start of things, because remember, as I keep saying, this was the first month that the platform went live. There's many, many more contracts in the works right now, and over the course of the next few months, you're going to see those start to roll out and be announced. And not only in Europe, but Tech to Health has a very strong presence in South America as well, and is in some advanced stage dialogue with some significant healthcare providers in that part of the world as well. So these numbers are going to get real significant, real fast on the tech to health side. Now, we own a piece of that. We own 22% of the global interest in tech to health. But our sweet spot in AIML is the North American market, meaning the US, Canada, and Mexico. We own 70% of that market. And we have, now that we've consummated the arrangement with Tech to Health. Now, we're going through the final paperwork to make the agreement official. We've got a binding letter of intent that we signed a few weeks back, and we expect over the next week or two, the official final agreement will be announced. But we do have a binding agreement in place today. And so we're starting to do our planning with respect to the penetration in the North American market for the Tech to Health suite of products. And that's where we have 70% of the revenue, not 22%. And to that end, I've already been in some advanced stage discussion with a significant health-related company in the US who has a very significant presence in the US, who is extremely excited to partner with us in the US market. So we're already making some significant inroads on behalf of the Tech to Health suite of products in the US market. Okay, so we announced these first couple of.
So there's the bottom line is you have, it looks like there's a pretty clear path to get to, $10 million, $20 million run rate for AIML.
We're completely comfortable with those.
And that's, and again, just so even if you do 20 million run rate, let's say you're doing 20 million run rate, the market is putting crazy multiples on health tech companies, 10x, 20x, 40x, I mean, whatever. So let's say you even get to, I'll just say 20x. Yeah, I don't know if you do it really quick, if you can get to 20 million really quick, you might trade at 20x. That's 500 million, multiple, and you only have what, 20 million shares out. So, potentially the stock could get to $25. I mean, that's what it would look like, $25. If you can ramp that 20 million run rate, let's say by the end of the year, I don't see any reason why the stock couldn't trade at this 500 million valuation, $25 a share. I know it sounds crazy, but obviously there'd be you might raise capital, dilution, etc. But so
sure.
just
I'll let the market decide what we're worth. My job is to go out there and find some creative acquisitions on behalf of the company, and I believe that we're doing that. And this isn't the end either. We do have some other acquisitions that we are in the due diligence process of, and I believe that we're going to be able to spring those on your viewers, in the upcoming weeks and months. That we'll be able to bring on some exciting additional companies in this same space, as well as show that we're making some significant inroads in the North American market with Tech to Health, expanding our footprint globally with Tech to Health, and as well being able to share the progress that we're making on the HealthGate side. So we've got some really exciting stuff coming up over the upcoming months. That's for sure.
Okay, so you have more acquisitions in the pipeline, building out the health tech suite, the AI-powered health tech suite. Sounds very exciting. Okay, come on. I think we'll just end on that note. We'll have you come back, next, when you're gonna have the next big news item.
Sure, that sounds good. I always appreciate being on your show, Jack. So anytime, I'm ready.
Very good, Tim. Thank you again.
Thank you.
Okay,
Jack Marks.
Okay, here we go. Let's go. We're running behind. We're running late here.
Oh boy.
So thank you, everybody. We got three great companies. This is like a trifecta of great companies today.
Good stuff.
Brent, let me just get everything set up. Oh, let me change it. Can I just get the camera down? You're more centered. I want to get you more centered. Okay.
How's that?
Yeah, that's good. Maybe a little bit higher. Some more of your face. More of what we get. Okay, perfect. Let me just get everything set up here. I have everything spelled correctly on the screen, just making sure. We got the Neo, right?
Yes, sir. You got it.
Okay, let me get, let's do a quick intro and let me just get some, and then we'll start.
Cool. Yeah, me too.
Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, July 15th, 2021. We are back with Logiq, LGIQ in the US and also in Canada. The stock just started trading recently on the NEO exchange in Canada, which makes it accessible to all the Canadians, finally. We got a lot of big Canadian audience. And, again, for anybody that's brand new to our program that might be watching this video later, our goal is to bring you those stocks which have that 10x to 100x upside potential, companies going after multi-billion-dollar market opportunities that are at a key inflection point. And there's multiple catalysts in place to drive that increase in valuation. We have seen that already with Logiq, formerly known as Wayland, starting last year. I think the stock was $3 and change when we began. I think we hit $14. It was like almost a 5x. And the big opportunity is there's been a pullback to the current price of $2 and change. Obviously, there's you did big financing and that brought out all the short sellers. So the stock it's basically on sale. It's like a 75% off, big discount right now in the market. So it's a great opportunity for people to basically get in right where the thing was last year. So, Brent, what I want to do is I kind of want to start off with, people need to understand like exactly what the company is. You're doing $40 million right now in sales in the e-commerce business, right? And the valuation is only about 50. You're basically trading at a 1x right now, right?
About 1.5, 1.6, yes.
And your peers, companies are doing pretty much the same thing, are trading at 10 times that multiple, right? So I think there's a built-in path to being a $20 stock just based on that valuation gap closing. That's correct,
Jack. The average price to revenue multiple in our peer group is around 21x.
No, I think it's a crazy. I think it's a crazy market opportunity for investors. Of course, this is not advice or anything like that. But just can you explain, Brent, what exactly is Logiq doing? Like, essentially, are you an enabler of e-commerce or markets? Like, what's your position in the market right now?
Sure. Okay. You're exactly right. We are an e-commerce enabler. So what does that mean? We have two business units. The first one is what we actually started with 6 years ago, Create App, which we have rebranded as App Logiq, and there are other products that fall underneath that business unit heading of App Logiq. But essentially, what that division does is it gets small businesses online. So that's enablement. We've had a historic focus in emerging markets because the bulk of people who are online in emerging markets, doesn't matter whether it's West Africa, South America, Latin America, Southeast Asia, the common denominator in emerging markets is that people use this device, not the computer, right? So you talk about peer companies like Shopify. They get businesses online, but in order to build your own website, you have to have a computer. You can't build it on your phone. And so you go into an emerging market and you try to talk to potential customers about getting on the phone, but they have to build their site through the desktop. It doesn't make sense. So we started on this, and we're still on this.
So mobile, it's focused mobile first. Is that the right way?
That's actually, yeah, that's the phrase. So that's AppLogic. We get offline businesses online. Data Logic, and most recently LDM, or Logiq Digital Marketing, are our newer business units. And what do? Well, they don't get businesses online. What they do is they focus on existing businesses that get online by way of Shopify, Wix, BigCommerce, a handful of others, WordPress, that help companies get online. But what we do through these two business units is we help them find customers, because that is the single biggest challenge in being online.
So what you do, you like optimize advertising spend, all those things, basically those, any kind of online marketing, all that good stuff. The ad tech business
is yes, exactly. Ad tech, lead generation. We use elements of artificial intelligence and machine learning to drill down and focus on purely through algorithms what demographic of customers are buying products from our customers, in tailoring their ad campaigns to focus specifically on those types of customers.
Okay, yeah, it's interesting because there are two earlier presenters who were basically AI businesses. I mean, the first one is a fintech business, the other is health tech, and you're basically using this. You just bought I think you just made an acquisition of an AI company in the ad space. Was it a couple months ago, right? 6 months ago? 2
months ago, we acquired Rebel AI, which has now been rebranded as Logiq Digital Marketing. We've had a few press releases recently that are starting to focus around what LDM does and who we serve, and I believe that as investors will see in the coming months, that becomes a very important part of our business, not only from a revenue perspective, but also gross margin improvement, and then the ability to attract and onboard customers very rapidly. So I think that's going to be quite exciting.
So I think perhaps one of the issues maybe you talked about before was that the reason why the multiple has not been 10x till now is that maybe institutions, whatever, they thought that, okay, your margins are low, it's kind of a low margin business that you had originally, and so that, they didn't value it. But now you're basically, the margins have been increasing. Can you talk about basically how you've improved the profit margins in the last 12 months or so?
Yeah, sure. Let me back up a little bit just to frame it in context for some of our newer viewers. So last year, as Jack was describing earlier, our share price went from roughly $1.80 to a high of $14. We traded comfortably between the $8 to $10 level. So we've traded at higher valuations before. Most of that was in anticipation of our IPO on NEO, which we just accomplished last month. So we're certainly capable of trading at higher valuations. However, the two challenges for us were trading on the OTC market only, and then secondly, as Jack, as you just mentioned, relatively low margins in our peer space. So last year and previous years, our average gross margin profile was about 15-16%. If you look around the peer group, you'll see 30% and higher. That was one thing. The other was trading on the OTC market only. We have actually solved both. We are now listed on the NEO. People may not be so familiar with it, but it is indeed a tier 1 global stock exchange, not just a market, it is an exchange. So we've solved that part. The second part, on the gross margin profile, what you'll see if you look at Q3 of last year, Q4 of last year, Q1 of this year, is you'll see gross margin improvement up to nearly 30%. We report earnings in, about a little under 30 days from now. And without speaking to that, what we have said on the past 3 conference calls is investors should look for gross margin improvement in sequential growth. But I think to put it in perspective, our current gross margin profile is the equivalent of having grown our revenue by about 50%. And so, some people say, oh, but your revenues have come down a little bit, or they flatline. Yes, but our gross margins have improved by almost double. And we have publicly stated that we're targeting higher margins. And on top of that, our growth will also start to ramp in a way that I think is going to look very impressive. So there is no reason currently that we are trading at a 90% discount to our peers, because we've solved it. So I think now is a really key time.
Yeah, no, I think the issue is that, this is the typical thing that happens in Canada, is that, once you announce a financing, then you can't, you have to go into a quiet period. You can't make any, and then the announcements, and then the short sellers in Canada. It's like a professional ecosystem. They can short your stock, and you can't really do anything to it, and they can't to defend it. So it's really incredible. So stock is $2 now. Again, like the normal range for the stock over the last year has been roughly, let's just say $8 to $10. Basically, that's been kind of the range has popped out of above it. And so I think there's a pretty easy path to get back to that. So it's like a 4x. 4x is just based on getting back to the normal place where it's been. But what about, you've made acquisitions in the past, right? You have obviously the organic growth happening. So there's, if the multiple goes to, just a normal pure multiple, the stock could easily be, $20 a share based on that. What about acquisitions? You've built a business through acquisitions, right? Do you have anything else planned?
We have built through acquisitions partly. I mean, you do see underlying organic growth that's been quite good. The past two acquisitions that we made, one last fall and then one 2 months ago, were more from the strengthening of our IP and our platform and services offering. And in the process, we have also met other companies that are larger, privately held. They could have been acquired at a very, very attractive multiple, similar to ours actually, but we didn't have the market cap to do so. So I think your question is more along the lines of so what's next on the M&A side. And interestingly, Jack, I was just our CEO Tom and I were just interviewed on the NEO exchange by their president right before I arrived in your studio today, and he asked the same questions. He said, "So talk to me about past M&A and what you're going to do going forward." So we are speaking about this now. So when we set out to build the company, the goal was always to become $1 billion enterprise, and that entails two things. It can either entail $1 billion market cap or $1 billion in revenues. I think one can certainly enable the other. So if we were trading at peer group multiples at say 20x revenues, which would not necessarily be unjustified, we'd have nearly $1 billion market cap. So what do you do at that point? What's next for those investors that come in at that level? Well, we would absolutely, and we're certainly discussing this now, and we have seen them. We would look to make acquisitions with our stock as currency of companies that have larger revenue bases, sales and distribution channels that we can then layer in our platform into. And then in addition to becoming $1 billion market cap company, you've got $1 billion revenue run rate underneath through strategic acquisition. So can we do it? Absolutely. And we've been seeding the ground for that with the past 3 acquisitions. Okay.
So yeah, so you have a track record of doing deals. So what do you have like an M&A pipeline right now? Like do you have an active pipeline of deals you're looking at?
We do. We actually have a very deep pipeline because in addition to companies that we've met and talked to about potential mergers and acquisitions in the past, year and a half, we also have relationships on the investment banking side groups that are in the fintech space, ad tech, e-commerce, and they represent clients on what's called the sell side. So they are constantly asking us, what are you looking at? We'd like to show things into you. So our pipeline is robust, extremely robust.
What's in terms of like the scope? Like how big are these in terms of revenues? Let's just say, like, what's the size of some of these deals? The potential.
Yeah, I mean, we've seen everything from some very nice fits, as small as 5 million in revenue, but with 70% gross margins and profitable, in just a perfect fit for our business. We actually do a little bit of work with that one in particular, all the way up to companies that are doing 362 million in revenues, privately held, could probably be acquired for not too much more than that. And would it be accretive? Yeah, it would. And would it put us into the $1 billion category? Yeah, it would. Okay. So once again, between those two. And so, depending upon where we are when we start getting more serious about these talks, which would ideally happen at a higher valuation, yeah, there's a lot.
Okay. So like in terms of, would it be, I mean, could you pick up, I don't know, 50 million in additional revenues through M&A in the next 12 months?
Yeah, we absolutely could. I mean, the one I mentioned that's 360 million plus in revenues. I mean, if we could acquire them at a low multiple, with certainly a higher valuation on our end, that's extremely accretive. And you add that in to our mix, and it's exponential.
Okay. No, so basically, let's say you come out of the 2022. Or you get to a run rate of 100 million next year. Between the organic side, what you have now is I don't know, 45. It might be up to 50 million. You pick up a couple. Pick up a couple of companies that are doing other. And there's a bunch of companies in the ad tech, marketing tech, e-com space that have, an e-com enablement space that have, revenues of 50, 100 million. There's a bunch of.
There are a lot.
So there is a bunch of things out there. So I mean, I think that, again, that's so there's multiple. You have multiple paths to get to that $1 billion valuation, whether it's through the closing of the valuation gap right now in terms of the multiple between the peers, or you have the potential acquisitions here, which and growth, which can increase again. So there's multiple paths to get there. So it's pretty interesting. Let's get to some audience questions. Paul's asking, NYSE application, what is, he's asking, has it been submitted?
I cannot answer that specifically, but I can say that we were waiting until the NEO IPO was complete to do that. Reg FD prohibits me from giving out information that's not widely disseminated. But again, we have stated that we were waiting till after the IPO to do that.
Okay.
I saw the latter part of the question. Do we meet all the criteria? We do, actually.
Okay, so that's something that could be out there on the horizon. Kevin is asking, as Logiq now has a big gross margin improvement via last year through acquisition, is there any targeted acquisition? Oh, I guess I asked you this question already. So you have anything else? You answered that, right?
Hope so.
Any other acquisition to improve, generate revenue in the next 3 to 6 months? So you think you can have another deal announced within 3 to 6 months?
Without, well, I can't say for sure. But what I can say is that we have a very robust pipeline, and we have engaged in discussions with a number of companies that would be extremely attractive. Would we do it down at this level, at this price level and valuation level? Probably not. They're not going anywhere. But I think the big question for our viewers right here is, what do you do if you narrow that gap? Or do you run out of steam? Is there still room to go? Yeah, a tremendous amount of room to go after that. because we would absolutely embark on larger acquisitions.
Okay. Question: with the partnership with KMSB Tech Mahindra Shopping Pay back in Q3 of last year, is there any significant revenue generated from these partnerships?
That's a good question. So I'm not sure if Kevin has been following what's going on in certain Southeast Asian countries. Actually, Indonesia just implemented their toughest lockdown at the end of last month. So, yes, it's worlds away, and yes, things in North America have improved on the COVID side, but they have not improved actually in Indonesia. They've actually gotten worse. So, it has certainly spurred e-commerce, but actual e-commerce enablement and being able to effectively roll out services that require face-to-face and require central business district populations to be at the office. It's been challenging. We've also been undergoing an audit of our Indonesia business unit for coming up on 9 months now. It should have been completed in 3 months, but the folks who were supposed to go into the office actually weren't able to do so. So they've been doing everything remotely, and it's just dragged on. So the reason I mention that is because overall, things are not back to normal, but we expect that to happen very quickly. But we have certainly not stood still during that. We've actually had a number of very exciting developments that have come about during COVID, and certainly the first half of this year that we'll be talking more about. And I think structurally it strengthens the things that we put in place last year that Kevin's asking about.
Hang on a second, my mic there was some noise. Okay, so it looks like basically there was a bit of a delay because of the COVID situation in Southeast Asia. But things are kind of on track. So you have some deals you're looking at, some M&A activity. What are the news flow can we expect? Because again, you've had to be quiet for the last 5 months. It's taken actually almost 6 months basically.
Yeah, actually a little more. Yeah,
the stock was basically in the quiet period. Do you have what kind of news flow can we expect coming? Should we expect new developments, any kind of positive catalysts to drive the stock in the next weeks?
We have a very also a very robust pipeline of developments and news. I think the real key to that is and actually what we've done is we've taken a look at how we've disseminated news in the past. And a lot of times I think what companies find is that when they put out news, it's almost for the sake of doing so, and it can the message can get lost. We're taking more of a strategic approach right now, and as we start to make announcements, these pieces start to fall into place, and investors can look at them and go, oh, okay, so they acquired LDM 2 months ago. That's what they're doing. That's what they're building out. Oh, these things they put in place last year with KMSB and Tech Mahindra, oh, they're starting to fall into place, and this is the traction they've gotten. And what we've also done is we've broadened our messaging in distribution channels to where investors will start to also see what's termed as thought leadership coming out of us. So it's not necessarily talking about, oh, hey, here's what we're doing at Logiq. It's things that are happening in the industry. What insight do we provide on things that Google is doing that affect ad tech? What are things that are going on in Southeast Asia with Grab or Gojek that affect our rollout? Things that that happen in our space, in our sector, that we have insight into because our management team's tenure in the sector is quite immense. Now, what does that do? For the average retail investor, that's not so helpful in terms of, oh, hey, yeah, I should run out and buy the stock. But what it does is more twofold. Institutional investors, which we've been sorely lacking in up until being listed on the NEO, want to see things that are more tangible in nature, underpinnings of a strategic nature, okay? And then secondly, they want to see thought leadership coming out, real insight into what's going on, because what that does is that indicates that the management team understands macro trends within their industry. And then furthermore, what it does, in very interestingly, the past two announcements that we've made about Logiq digital marketing, we've actually gotten new customer leads as a result of that, because being featured in industry press and on social media that's specific to our industry sector has attracted people who understand what we're doing, and they say, oh wow, I didn't know you guys were doing audio. Oh wow, I didn't know that you guys are opening up your platform to include these things, which we've had a real interest in. So it extends beyond just the retail reach. I'm not saying that retail is not of utmost importance, but being able to have institutional investors that say, wow, these guys really understand the sector they're in. They're not all about their company. They understand the underlying dynamics of their industry. It also says to potential customers and existing customers, they're building relevance around their platform that really matters to us as customers and can help us with our business, because that in turn helps our business. So I hope I answered that by saying
so it's going to be the company's basically bottom line is the company is going to be kind of there's more on the radar of whether it's investors, whether it's the business, etc. So that should help increase
absolutely
everything else. Okay, excellent. Okay, Brent. On that note, I think I want to thank you, and we're gonna look forward to hearing more news the next couple of weeks. Get you back on again with because we've had a long delay last with a quiet period, and hopefully there's gonna be some solid developments. Ideally, M&A activity. We love M&A activity. Investors love to hear about that.
For sure.
Fantastic. Okay, Brent, thank you again. Thank you everybody for joining our live stream, and we will see you on the next one.